Okay, again, in order to sell our products, we need to find the cost of our product. In order to find the cost, we're going to have two available costing systems. One costing system is process costing. The interesting thing in the process costing is company will produce single product, but many of units of that product. Simple example is I'm producing yogurt. I'm Austro-Balkan and I'm producing Balkan style yogurt. And I'm producing it for the whole week. Over and over and over and over again. Every product is the same product. I cannot distinguish between one product and the other product because they're exactly the same. The content is the same. The amount is the same. The box is the same. Everything is the same. Now that identical nature of each product is going to help me to assign the same cost for every single product. How can I do that? By calculating the cost that I actually spent during the period of time, 1 week or 1 month, divided by the number of products that I produce for the same period of time. And my job is done. I have the cost of my products. Now I can price my product. Example here will be for the process company who's using process costing will be that cement mixing company, Petro-Canada for refining oil, and Coca-Cola of producing the same drink over and over and over again. The job costing is the second available costing system that we're going to have available. The interesting thing with the job costing is now we're going to have a different products which are produced in the same period. So now we're not producing the same product over and over again. Now producing unique products, and products are produced only and only when there's an order. When the customer places order, then we start producing our products. Now, the unique nature of each product will require we to trace the cost for each job in order to calculate the cost of the product. Example for this will be Bombardier. You know what the Bombardier is, the Canadian company that's producing the aircraft and Skytrain. This large-scale construction company, any construction company is going to use job costing. And the last example will be the Hallmark with the greeting cards, because every greeting card has a different greeting, different design, everything is unique. So to summarize, the two costing systems, process costing and job order costing. In job order costing, we're going to produce many jobs or many products, where in the process, we're going to have a single product. Costs in the job order will be accumulated to that particular job or that particular order, where in the process costing will be accumulated for the entire department. The average cost will be computed by specific order, where in the process costing, the average cost will be computed for the entire department and will be assigned for every single product. So all the products are going to have exactly the same cost. So which of the following company would likely to use job order costing rather than process costing? And we have first, company that producing Kleenex. What do you think they're going to use? Job order costing or process costing?
What is a Kleenex?
Sorry? Kleenex, those are the cleaning papers and cleaning towels that we're using when we're crying and when we're blowing our noses and everything. Kleenex.
Okay, so that should be process.
Process costing, yes. How about architects?
Job order.
Job costing.
That will be job costing, right? Job order costing. Yes. How about ketchup? Heinz that producing ketchup.
It's processing.
That will be process, right? Because once we start producing ketchup, we're not stopping until we finish. Catering of the wedding reception.
Job order.
Job order, right? Every single client's gonna come with the different requirements. How about the builder of those commercial fishing vessels?
Also job order, right?
Also job order, yes. Every vessel is gonna have different specifications. Yes, that will be also job order costing. You're correct. So now let's go over the process. First, in order to have a product, we need the three costs. Which are the three costs? Direct material, direct labor, manufacturing overhead. First, we're going to charge that direct material to the jobs that we have to finish. That's easily, we can trace them job by job. Then we're going to get somebody to work on those jobs, and we can easily assign the cost for direct labor for job 1, job 2, and job 3. After we're done with the direct material and direct labor, comes the difficult part, manufacturing overhead. Why manufacturing overhead will be difficult? Because including the indirect material, indirect labor, and all the other costs which are related to the production, but cannot be easily traced to the product. For that reason, we have to be very careful and we have to make sure that we are assigning that overhead to our products. So how are we going to do this? We're going to create this job cost sheet. On the job cost sheet, you're going to see the company name, which job order, job number is, which department doing it, what exactly they have to produce, when the order was initiated, and everything. On that cost sheet, you're going to see the main three costs, which are direct material, direct labor, and manufacturing overhead. Once we have those three, we're going to calculate the total cost. Once we have the total cost, we're going to see how many units we completed, and we can come up with the cost product. So let's start. First, we're going to assign the materials. For this particular job, we use that much material, that's quantity, that's the cost per unit, and we come up with the cost per material. Easy. Person from the inventory is going to assign it, and we're going to move the materials, we're going to use it in production. Easy, we know exactly what we are doing. And we're going to assign that direct material to our job cost sheet. Next thing, we're going to get somebody to work from his timesheet card. We're going to see the person work from 8 o'clock in the morning to 4 o'clock in the afternoon. He spent 8 hours. We're paying him $11 per hour. That's $88 for that particular job. And we get our direct labor. Now we have direct material and we have direct labor. So easy to trace. Now we coming to the problem is, what we're going to do with the manufacturing overhead. So somehow we have to allocate manufacturing overhead to our product. So we have to choose a location base. What we're going to choose for location base? We can choose different things. We can choose direct labor hour to be our allocation base, or we can choose direct labor dollar amount to be allocation base, or we can choose the machine hours to be allocation base. But one thing that we have to remember, the allocation base has to be common for all our products. Why are we choosing that allocation base? Because it's impossible or it's difficult to trace that overhead cost to a particular job. Then manufacturing overhead, it's comprised from the many different items. Many types of the manufacturing overhead costs are fixed. And the timing of the payment of those manufacturing overhead costs is different. Sometimes in the beginning of the period, sometimes in the middle of the period, sometimes at the end of the period. So in order we to get the cost, it will be very hard to stop our production, to get the cost, and then to keep going. For that reason, we're going to calculate this predetermined manufacturing overhead rate. How we can do that? We're going to estimate our total manufacturing overhead cost for the coming period. Usually, again, it's 1 year ahead. Then, once we choose the allocation base, which allocation base will cause our overhead, ideally, we're going to estimate the total units of usage of that allocation base for the same period that we estimating the total cost. Remember, the total cost and the number of units of allocation base have to be in the same reality. Then we're going to divide it numerator to denominator, and we're going to get the predetermined overhead rate. Why do we need that predetermined overhead rate? Because if we use the predetermined overhead rate, we can actually assign cost to our product, and we can calculate the cost for the job or cost for the product. The other reason is we need that overhead rate because the actual overhead for the period is not known until the end of the period. For that reason, that predetermined rate, since it's based on the estimate rather than actual results, is going to help us for the time being to have cost for our products. For that reason, we have to calculate that predetermined overhead before the period starts. And once we apply that predetermined overhead before the period starts, we're not changing it during the entire period. It's very important you to understand that once you come up with a predetermined manufacturing overhead, you're not changing that rate during the period. You're using it for the entire period for which you're calculating the cost and you estimated the usage of the allocation base. So now for those of you who are working in the manufacturing company, or if you're working for the service company, if you're working for construction company, after this chapter, I want you to go back to your costing systems that you're running and the cost accounting that you're running in the companies that you might working, and check what is your manufacturing overhead rate and how the people in your company come up with that manufacturing overhead rate. Because trust me, every company which either in service, either in construction, either in production, they have manufacturing overhead rate. So application. So once we estimated the predetermined overhead rate, when we actually use the allocation base, actual activity, time the predetermined overhead rate is going to give us the manufacturing overhead that we're going to apply to our products. This company, they calculated that the total cost for the next year will be $640,000. They estimated that allocation base will be the first. They choose the allocation base to be direct labor hours, and they estimated that for the same period, 1 year ahead, they're gonna have available through their workers 160,000 direct labor hours. So now they have $4 predetermined manufacturing overhead rate, which they're gonna apply every time when the single worker works on the job. So for every direct labor hour, this company will gonna apply $4 manufacturing overhead. Let's go back to the cost card. Do we know how many hours worker work on our job? Yes, we do. Worker work from 8 o'clock to 4 o'clock in the afternoon. That's 8 hours. 8 hours times $4 manufacturing overhead. We're gonna assign $32 manufacturing overhead to this particular job. Now we can calculate our total cost. Our total cost turned out to be $236. Since we're producing the units that we completed was 2, cost per single product come up with $118. So that $118 cost per product will be only applicable for those 2 units under this particular order. If the customer comes later and say, can I have 1 more unit of this product? The average unit cost will not be the same. So that unit cost 180 should not be interpreted as a cost that would possibly happen if 1 additional unit is produced. No. The cost will be different. So for that reason, we have to come up with a separate calculation based on the 3 units or 1 additional unit in order to come up with the cost. Why? Because we have so much different costs inside of the cost structure here. We may have a fixed overhead, which might not change if 1 additional unit is produced. So the allocation base is the key in our calculation. Allocation base should actually drive the manufacturing overhead cost. And the cost driver is the factor that causing the overhead cost. If you choose, so now you have to be careful here, you as a managers one day, when you start to pricing your product. Do you understand the whole logic of manufacturing overhead? Question for you. Do you understand the whole logic? Do you understand why we have to allocate that manufacturing overhead to our cost of the product?
I understand why, but I'm not really sure how to get to that point to know what to consider into the manufacturer overhead. I mean, I know, but I am still uncertain on on
Are
all
you
the stuff that needs to be considered.
Are you
Yeah, I
working?
agree.
Are you working?
Yeah, I am.
What kind of company you working in currently?
I work at a shoe selling store.
Shoe selling store.
Yes.
Let's go on the shoe manufacturing store. Let's pretend that you're a shoe manufacturer. Okay.
Okay.
So how are we gonna get the cost of the shoes?
Mm,
We're gonna
okay,
have direct material, right? What will be the direct
material.
material? The direct material will be the platform of the shoe. Let's say we're using some a kind of leather. Let's pretend we're producing leather shoes. We're using the leather on the side, right? Those will be the direct
Yeah.
materials. But then there will be some indirect materials, right? The glue will be the glue that we're gonna use to glue the shoe. That will be indirect material, because the amount of the glue that we're using is not that big amount, correct?
Okay. Yeah.
We're gonna sew the shoe here and there. The thread that we're gonna sew the shoes is also gonna be indirect material, because the
Okay.
cost of that thread will be very small. Make sense?
Okay. Yeah.
So now, material, we already get the idea for the material, correct?
Yes. Yes.
So
Okay.
now
So
let's try to figure
only
out.
the thing.
Yeah,
Oh, sorry.
go
That
go go.
only we have to consider like the materials that are significant in the cost
Significant,
part.
right? Because the leather, we can easily trace it, and we can see how much, let's say, half meter leather we're using here. We can easily come up with the cost, right? But for the
Okay.
glue,
Yeah.
I'm using, let's say, 10 milliliters glue. It doesn't make sense for me to come up with the cost for 10 milliliters glue to consider it as a direct material. Better consider it as an indirect material and then apply to the whole product. Make sense?
Okay. Yeah.
Same thing with the thread that we're gonna use to sew the shoes. I'm using, let's say, 30 centimeters thread. To come up
Okay.
with the cost with that thread, it's going to be too complicated calculation. For that reason, I'm just going to put it as a manufacturing overhead, and I'm going to trace the cost in total rather than tracing it for how much is 1 centimeter thread. Make sense?
Yeah, it makes sense.
So that's with the material. Let's think about labor now. There's a person who has to, use the machine to sew the shoe, and then glue the shoe and everything, right?
Yes.
That person, he has a like a time card. We can easily trace his hours to the shoe, correct?
Yes. Okay.
But now we have a problem, because now there will be cleaning people who's gonna come after the working day, who have to clean the warehouse. There will be security people who have to perform security, which is related to our factory,
Okay. Yeah.
right? Is this part of the cost of the shoes?
Just indirectly, right?
Indirect. So that will be our indirect labor. Make sense?
Okay. Yeah. It
So
makes
now
sense.
so now you can see how we can easily find the direct material and direct labor. Now the question is, we can calculate direct indirect material and indirect labor, but is that the only cost of the shoe?
I think not.
Not. Why not? Because first, we have to pay rent for our warehouse when we're producing the shoes, correct?
Yes, of course.
We have to use the machine, which machine has a amortization, which we have to transfer our cost to the machine, because the machine was used to produce the machine. We have to
Okay.
we have to assign some of the cost of the lights, because the warehouse, it doesn't have a window, so we have to use the light. The light comes with cost. We have to
Okay.
pay insurance for our warehouse, which we want that cost to be transferred to the client as well, correct?
Okay. Yeah.
Also, we're going to pay the security, which we also want that cost to be transferred. We have to pay for other utilities and anything like that. So is this cost, the question that you're going to ask, is this cost is because I have my warehouse that's producing the shoes? If it's related to the shoes, yes, it is a product cost. No, it's not direct cost, but it's still related to the product. The question is, do you want the client to pay for this cost?
Well, of course, right?
Of course. So how can you include it in the cost of your product? Since it's not direct material, it's not direct labor. How can you include it?
So that's how you come with the manufacturer
That's
overhead?
how you come up with the manufacturing overhead. Make sense?
Okay, yeah, that's thank you.
So, because at the end of the day, you have to understand that the reason that we have a manufacturing overhead is because it's easy to see direct material and direct labor, but it's hard to see all the other manufacturing costs which are hard to trace to the product. But those costs exist only and only because we have our manufacturing site. And we as a rational people, we want the client to pay for that cost. Because if the client don't pay for that cost, who's gonna pay for it?
You will rely on us, right?
Right. Once you start running your business, you have only one shot to cover your cost when you sell your product. Make sense?
Yes.
When the client comes and say, how much for the shoe? And you say $20, he pays $20 and he walk away with the shoe. If later on you figure out that you forgot to include the property taxes in the price of the overhead and to charge those ones to the client, too late. Now you have to pay from your pocket. Make sense?
Yeah, makes sense.
Because if you run your business, you're going to have all the costs, possible costs for the business. Who's going to pay for this?
I'm gonna pay for it if I don't charge
If
the
you do,
client, right?
if you don't charge the client, you have to pay for it. Make sense? If it's not
Yeah,
part of cost of goods sold, it's going to be part of the operating expenses. But if you don't have a gross margin, you won't be able to cover your operating expenses. So either you have to get the client to pay for it, either you have to generate ginormous gross margin so you can have enough money to pay your operating expenses. Otherwise, you're never going to see income,
okay, okay,
right?
understood.
But
Yeah,
the income is the reason that you open your company, correct?
yes.
Do you understand this? Now, ideally, what you want ideally is once you open your company, let's say I'm open bakery store. I'm opening bakery store. I want through the cost of my cake to have every possible cost related to my bakery store. Make sense? And
Yeah, it makes sense.
once I spread that cost for all the cakes that I'm selling during the year, client's gonna pay for it. And I don't have to worry about it. I can enjoy my profit. If I don't make the client to pay for that cost, then who's gonna pay for it?
We
I
are.
have to pay for it. From where? From my profit. So instead of making profit, I'm just gonna. So basically, you open your company. I'm opening my company so I can work for myself to generate profit. And at the end of the year, you're seeing that I'm just working and there's no profit. Why? Because I forgot to charge the client for the cleaning. I forgot to charge the client for the rent. I forgot to charge the client for the cream that I'm using. I forgot to charge the client for the security. I forgot to charge the client for the electricity. Then why just go and work for somebody else? Obviously, you cannot run your business. Why? Because
Okay,
you're not charging the client manufacturing overhead. You're not transferring the costs of your business into your product. Make sense now?
Yeah, it makes. Thank you very much.
right? That's why it's very important you to understand what triggers manufacturing overhead and how to find a way to allocate that manufacturing overhead through the year to come for the cost that's to come. Because again, once the client pay, let's say I'm selling cake and the client comes and say 35, I'm saying how much for the cake? I have to, once I say $35, that's it. Do you understand this? I cannot change the price anymore. Once he get the cake and walk away from the store, I cannot run after the client and say, excuse me, I'm sorry. You know what? I forgot to include the security that I'm paying overnight. That's another $50,000 per year divided by 100,000 cakes. That's another $5 per cake. Can you please pay me additional $5? Too late. Client's gone. Either you're gonna put that cost in the manufacturing overhead, you're gonna allocate it somehow to all your products and make the client to pay, either you have to pay for your pocket. That being said, watch this. What will be the manufacturing overhead in the, do you think Douglas College charging manufacturing overhead in the price of the course?
Yes, of course.
Yes, of course, right? What will be included in the manufacturing overhead?
Wage for the employees.
Okay, what else?
Textbooks.
Textbooks, no, that's textbooks, that's not part of the cost. Because the textbook cost is you're paying the cost. The college doesn't pay the cost for the book, right? That cost is considered reimbursed cost, right? I'm having the books in my store, but I'm not paying for it because whatever I cannot sell, I can send it back to the publisher. There's no cost in there. Come up with something else.
Cleaning
Money.
services.
Sorry?
Cleaning services.
Cleaning services. What else?
Security.
Okay, what else?
Administrative services.
What else?
Consumable.
What else?
Utility bills.
Okay, what else?
Supplies for teacher use, like
What else?
markers.
Okay, what else?
Insurance and sometimes the damage for the
Okay,
the
what else?
product.
What else?
Property taxes.
Property taxes. So, question for you. Have you ever noticed that there's a free popcorn that they're giving sometimes? In the main area, they're having popcorn and they're giving the students popcorn free. Have you noticed that? Or maybe because you're taking online, you don't know that. So the question is the popcorn actually free?
No, is it like student union fees?
Where will be that? Where can I find that cost? In
It's
the
funded.
manufacturing or in the my overhead. So if I want to throw something for free for the students, what I'm gonna do? I'm gonna make sure that it's in the overhead, students pay for it, and then I'm gonna give it to them for free. So every time when you see something for free in life, make sure you understand how free is free. And trace it back to the overhead to figure out, is it actually free or is just part of the overhead? Because that's a very common technique for any industries. When you see that the company give you, you're going for, like, let's say Costco, right? They give you food samples. You already pay for it. There's no such a thing like a free lunch, people. You have to understand, you are smart enough, you're about to become a manager. I'm going to include it in the overhead, and then I'm going to give it to the people for free. without telling them they're actually paying for it. That's why I'm going to encourage them. Take more, please, please. It's for you. And on the other side, you already pay for it, so take it. You better take it. So for that reason, now let's go back to the allocation base. It's very important you to choose the proper allocation base, which through that allocation base, you're gonna assign the overhead for every single product, and you're not gonna miss one product. Because if for one product, if you choose allocation base which doesn't apply to all of your products, then one product is gonna have overhead, the other product is not gonna have overhead. But that's not the thing that you want. So let's see this question now. Let's see some calculations now. Does this make sense? No. Is this explanation about the overhead make sense? Hello? Can you guys hear me?
Yeah, I can hear
Yes.
you. Just that the question looks a bit difficult for me.
Okay, so let's see how difficult is this question. What do we chasing here? Three costs, right? We're chasing three costs. Which costs we chasing here? Which are the three product costs? Talk to me.
It's direct material,
Direct material.
labor.
Okay, let's stop with direct material. Can I find direct material?
200 of
200
direct
material. Okay. What's the next cost that I'm chasing?
labor.
Direct
And
labor. Can I find the
yes.
direct labor?
Is the $150.
How did you get 10 hours times
hours
$15?
$15 per hour.
$150. Correct. What's the last cost that I'm chasing for the product?
The overhead manufacturing.
Manufacturing overhead. Okay. For the manufacturing overhead, what do I know? I'm applying manufacturing overhead based on what's my allocation base here.
It's 20,000 for the
Direct labor hours, right? Direct labor hours is my allocation base. Make sense? So let's see.
times 10.
My total cost is 760,000, correct? My total usage of allocation base is 20,000. How much is my predetermined manufacturing overhead rate? That will end up
38.
with 760 divided by 2, right?
Yes, 38.
38. 38 is dollar amount for every hour that I work, correct?
Times 10.
How many hours did the workers work?
10 hours for this project.
10 hours times 38. How much,
350.
how much overhead I'm gonna assign? 308, right? 308. So what will be the correct answer?
C.
C. 380 is manufacturing overhead, but we're looking for the cost for the entire job.
It's D.
What will be the correct answer now? D, right? Because we have to include direct material, direct labor, and the manufacturing overhead all together. Once we have those three costs, we're gonna have the cost for our job. Make sense?
Yes.
So we're gonna have 200 plus 150 plus 380. And that's gonna give us $730. Again, manufacturing overhead rate, we're gonna get it as a total cost divided by the total estimated direct labor hours. We're gonna come up with the 38 rate. And when somebody work on this project, this job for 10 hours, we're gonna apply $38 for every single hour they work. That's 380 hours.
Sorry, quick question.
Yes.
Where did 380 come from? We divided something by something to get to the manufacturing overhead. I was a bit
Yes, I can see that. So where the money, how are we calculating the manufacturing overhead? We're getting the total cost divided by
okay.
the total usage of allocation base.
Total cost. Okay.
How much is our total cost? How much is our estimated total cost?
It's 760,000.
Since 760,000 is our nominator.
Yeah.
What is the estimated usage of our allocation base?
20,000.
20,000. So how much is our rate, predetermined overhead rate?
38.
38. Okay, 38. What's the allocation base?
The allocation base
Is
is uh
direct labor hours, correct?
direct labor hours, which is 10, so we multiplied by 10 to get 380.
Yes.
Okay.
Make sense?
Yeah, I think so, up to a degree now.
Awesome. Great. So let's see what's the job order documentation flow. I remember the very first class, somebody asked me for what's the PO, purchase order. So now the PO is the requisition from for the request for the purchase. Now, let's see, when we are selling and we have to produce our product based on the sales order, what's the proper documentation? First, when somebody calls on the phone, we're going to create a sales order. Based on the sales order, we're going to issue the production order. Production order is how many products have to be produced. The production order is going to trigger the material requisition form. Then it's going to trigger direct labor time ticket. From the material requisition form, we're going to extract the material that we're using. For direct labor time ticket, we're going to get the direct labor. For the predetermined overhead rate that we already calculated in the beginning of the period, by applying the allocation base, we're going to calculate the overhead rate. Everything, direct material, direct labor, and the predetermined overhead, we're going to put it on the job costing sheet. And from the job costing sheet, we're going to come up with the cost of goods manufactured. And later on, that will become our cost of goods sold for 1 unit. Now let's do a little bit more detail flow of the cost using those T accounts. The one that I show you in the beginning on the Excel spreadsheet. First thing first, direct material. Direct material, in order to get the material, first we have to purchase that material. Once we purchase the material, now we have material to use. Direct material is going to go directly to the work in process account, which is on the job cost sheet. Indirect material, we're going to temporarily assign it to the manufacturing overhead account under the debit side, which will be the actual overhead cost. How are we going to do it with the journal entry? First, we're going to purchase the direct material, the raw material, sorry. Debit raw material, create accounts payable. And after that, we're going to use this raw material by debiting working process for the direct material, manufacturing overhead for the indirect material, and we're going to reduce the raw material inventory on the credit side. Next, we're going to use the labor. We're going to get direct labor from the wages payable. we're gonna get the indirect labor from the wages payable. Direct labor, we're gonna put it in the work in process on our job cost sheet, where the indirect labor is gonna put it, we're gonna put it temporarily on the manufacturing overhead account under the debit side for the actual cost. So how that's gonna look like? Debit work in process for the direct labor. Debit manufacturing overhead for the indirect labor, and credit salaries and wages payable for the cost of the labor. Once we have direct material, direct labor, then left for the other overhead.
Evan, may I see
Yes.
the journal entry again?
Here, yes. In work in process, we're gonna transfer the direct labor. In manufacturing overhead, we're gonna transfer the indirect labor.
Okay, thank you.
And we're gonna get it from the salary wages payable.
Thank you.
Now, for the other costs, once we have direct material, direct labor, now we have to calculate the actual usage of the other overhead costs. What will be that? That will be those gonna come from accounts payables, for the utilities, for the security, for the insurances, property tax payable, prepaid insurance, accumulated depreciations. For those accounts gonna come directly to the manufacturing overhead. Again, this will be the actual cost. Once we have the cost, once we come up with the predetermined overhead rate, now we can charge the overhead to work in process based on the, again, on the predetermined overhead rate and the actual usage of the allocation base. We want to do that. Don't forget, we want to charge our clients for the manufacturing overhead. Why? Because otherwise we have to pay for it. If you open your company, again, either you have to pay for cost, either you have to charge the client to pay for the cost. You decide what you want to do. If I were you, I'm going to make the client to pay for everything. But that's me. So how are we going to do this? We're going to transfer manufacturing overhead to the work in process inventory account, and we're going to get it from the manufacturing overhead account. At the end of the period, we're going to go and check our manufacturing overhead account. Don't forget, this account is cumulative account. No beginning balance, no ending balance. So at the end of the period, we have to clear this account. Two possible scenarios. On debit side, again, we're gonna accumulating the actual overhead cost. On the credit side, we're gonna accumulate the manufacturing overhead that we applying during the process of calculation of the manufacturing overhead using the predetermined overhead rate. What we're gonna do with the non-manufacturing cost? Salary expenses for the employee who's working in the marketing and selling, administrative and accounting and advertising expenses, and those who are not related to the manufacturing and production, we're gonna directly expense those ones. That will be our operating expenses. Salary expenses, salary payable, advertising expenses, accounts payable, any other expenses, any other payables, directly. Nothing scary here. Once we have our product, once we say, okay, we have direct material, we apply the direct labor, we apply the manufacturing overhead, our product is ready to be moved to the finished goods inventory available for sale. So we're gonna get the cost of goods manufactured, And we're going to transfer that cost of goods manufactured from the work in process into the finished goods inventory account. So that will be debit finished goods inventory, credit work in process inventory. Once the goods are sold, we have to do two transactions. First transaction will be to record the sales and increase our assets, either accounts receivable, either cash. And second transaction is to record the cost of goods sold and reduce our inventory. Don't forget, we're producing the units not because we want it in our inventory. We want to sell it to the client. Why we want from the what we want from the client? Cash. So we want to transfer that inventory into cash. And we want to see how much is our profit. How are we going to see? By directly applying the sales price versus the cost of goods sold, and we can see our gross margin right there. That's why we have two transactions every time when we sell something. First transaction is to record the sales and increase of the assets. Second transaction is to show the cost of goods that you just sold it and reduce the inventory with the same cost because you don't have it anymore. At the end of the period, we're going to our working manufacturing overhead account and we start looking and comparing debit to credit. Debit, again, remember, is the actual cost. Credit is the cost that we applied. So we're going to have two possible scenarios. First scenario is under apply overhead. Means that amount that applied is less than the actual cost during the period. Second possible scenario is over apply overhead. Means that the amount that we apply as overhead during the period is more than the actual cost during the same period. Let's see what happened with this company. The actual overhead or the debit on the manufacturing overhead account, their debit is $250,000. Oh, sorry, $650,000. Can you see it?
Yes.
Yes.
The actual is $650,000. How much they applied? Now they apply overhead using the predetermined overhead rate $4 per hour time 170,000 hours. So how much cost they apply as a manufacturing overhead during the period?
680,000.
680,000. So what they did they under apply or over applied?
Over applied.
Over applied. Can everybody see that they actually over applied?
I don't think so. I think it's under apply.
So let's think about it. Again, the actual cost for the period was 650,000, correct?
Yes.
They're applying overhead using the direct labor time predetermined overhead rate, which is $4. The direct labor for the period is 170,000 times $4. So they apply $680,000
I got it. Thank
to
you.
the right. So now the
Yes.
question is, which one is higher? What they're applying or what the actual cost is? What they're applying is more, correct? How much
Yes.
more?
$30,000.
$30,000. So the $30,000 will be over apply manufacturing overhead. Make sense?
Yeah.
Now the question is, the one that we solve on the Excel spreadsheet, what are we gonna do with this $30,000? Option one, since we put more cost in the cost of goods sold, which we shouldn't, we're gonna go directly to the cost of goods sold and we're gonna reduce cost of goods sold with $30,000. That will be first option. Second option, which is more accurate, we're gonna start tracing. Is there any of those products that we produce this period where we are applying this overhead sitting in the work in process? Is there anything sitting in the finished goods? And probably the rest is in cost of goods sold. So we're gonna have to go to all those three accounts and adjust those three accounts. So let's go first with the simple one. First one is we already figured out that we over applied $30,000. So what we're gonna do? We're gonna go and reduce our cost of goods sold directly. So we're gonna debit our manufacturing overhead account and we're gonna credit cost of goods sold. Remember, once I credit cost of goods sold, I basically reducing the cost of goods sold. The other option is I'm gonna start chasing. Is there any of that overhead products in the working process, finished goods, and cost of goods sold? They figure out there is some. So if they figure out 68,000 sitting in working process, of the 680,000, remember the 680, that's how much we apply here. 680 we apply. From this 680, we have 68,000, which is sitting in work in process. 204 sitting in finished goods, and 408 are already sold. So what we're gonna do? We're gonna sign the percentage. Total is 100%. Work in process will be 10%. Finished goods most likely will be 30%. And 10 plus 30, that's 40. So the cost of goods sold will be the other 60. And we're gonna assign the percentage, 10% to the work in process, 30% is finished goods, 60% to the cost of goods sold. Now the question is, how much was over applied? 30,000. So now we have to assign this 30,000 based on the percentages that we calculated here to all those three accounts. What that means? That means that 10% of the 30,000 is going to go to the work in process. 30% of the 30,000 or 9,000 is going to go to the finished goods. And the rest, 60%, it's going to go to the cost of goods sold. What will be the effect in those accounts? They're going to reduce those balances. Why? Because we over applied the overhead. So we have to reduce those balances to counter the effect of the over apply overhead. The journal entry will be manufacturing overhead debit, so we can close the manufacturing overhead to 0. And then we're going to credit work in process. That means we're reducing the work in process. We're going to credit finished goods inventory. We're going to reduce the finished goods with 9,000. And we're going to credit the cost of goods sold, reducing the cost of goods sold with $18,000. Let's see if you can get this question. This company has actual manufacturing overhead cost of $1,210,000. This is the actual. This is the debit on the manufacturing overhead account. On the other side, how they're applying the overhead, they're using the predetermined overhead rate of $4, and their allocation base is machine hours. So the machine actually work 290,000 hours. How much is the overhead that they applied?
It's $50,000 under applied.
Sorry?
$50,000 under applied.
No, before we go to the 50, you're just going to the, but tell me how much overhead they applied.
$1,160,000.
Everybody get that number?
Yeah.
Yes.
So what happened? Do they under applying or over applying?
Under applied.
Under applied. How much? $50,000. Everybody can see this as an answer. Can you? Can everybody see $50,000 as an answer?
Yep.
Yes.
Yeah.
Okay, great. That will be the logic. Overhead applied is 1,160,000. Actual is 1,210,000. So basically you're under applying $50,000. So let's overlap
Level,
over, yes?
you were breaking up. I couldn't hear you very well.
Yeah, me either.
How about now? Is it okay now?
Yeah, it's okay now.
Now it's better.
Okay, so let's wrap up again this. If manufacturing overhead is under applied, we have to either increase cost of goods sold, either increase work in process, finished goods, cost of goods sold. If the manufacturing overhead is over applied, then we have to either decrease cost of goods sold, either decrease work in process, finished goods, and cost of goods sold. Make sense?
Yes.
Okay. Let's see this question. This question is going to give me idea. Do you understand the whole concept? So the question is, what effect will have adjustment in the cost of goods sold for the over-apply overhead on the net operating income?
That would be
A, right?
Sorry?
A.
yes, I agree.
Everybody see A as an answer. Now the
Yeah.
question is, can everybody see A as an answer?
I
Yeah.
would say C.
You would say C.
Yeah.
Let's think about it. So now, this is a very interesting question. So in order to answer this question, I'm going to copy the question and I'm going to move to the Excel spreadsheet, okay? So we can actually see it. I'm going to stop sharing for a second and I'm going to share the new screen with the Excel spreadsheet. Can you guys see my Excel spreadsheet?
Yeah.
So again, what do we have to do? We have to make adjustment in the cost of goods sold, correct? We have to make adjustment in the cost of goods sold. Why
Yeah,
do-
I remember from that.
Right? Why do we have to make adjustment in the cost of goods sold? Because we over applying the overhead. Correct? So let's say our overhead is 55. We apply it. So the overhead in finished goods is 55,000. On cost of goods sold is 55, correct? That's the scenario that we have. But we over applying the overhead. So what do we have to do? We have to adjust it. With how much?
5,000.
With 5,000. When I adjust it with 5,000, what's going to happen with cost of goods sold? It's going to go up or it's going to go down?
Down.
It's going to go down. What will be the effect on operating income?
Will increase.
It will increase. Make sense? So if I
Yeah.
reduce this number to adjust the actual to 50,000, operating income is going to go up. So what will be the answer here?
A.
A. Now, can you see it now as A?
Just a quick question. When
Yes.
we, like you said, cost of goods sold would go down. I think I do understand that. That's 55,000 minus the 5,000,
Yes.
and then like operating income basically would have gone up because it's like
It's minus
yeah,
it, right?
yeah, it's an inverse.
Yes, that's correct,
Oh, okay.
right?
Yeah, okay, thank you.
Every time when the cost goes down, the income goes up. When the cost goes up, income goes down. Those are working in the opposite direction. Okay, great. Let's stop sharing this. Let's go back to slides. So the answer here is A. Just quickly, again, to go over the idea with the overhead. First, we're gonna estimate the total manufacturing overhead cost. Then, after we're choosing allocation base, we're gonna estimate the total usage in units of the allocation base. We're gonna come up with the predetermined manufacturing overhead rate. We're gonna use the predetermined overhead rate during the period by applying it to the actual usage of the allocation base. Every time when we actually using one of the units of the allocation base, time the predetermined overhead rate, we're gonna apply manufacturing overhead. At the end of the period, we're gonna compare actual overhead with the total manufacturing overhead that we applied during the period. And we're gonna have either under-applied, either over-applied overhead. If it's over-applied, if it's yes, then we're gonna allocate amount of among work in process, finished goods, and cost of goods sold. If it's under-applied, we're gonna go and we're gonna adjust cost of goods sold. The other chart is the general cost flow. How the cost flowing from which account to where they're going. First, raw materials. From raw materials, we're gonna take the direct material. We're also gonna take indirect material, and we're gonna put it in the manufacturing overhead. From the wages payable, we're gonna get the direct labor. Also, we're gonna get the indirect labor, and we're gonna apply it to the manufacturing overhead account. Once we have direct labor, direct material and direct labor from the manufacturing overhead account, we're gonna apply the manufacturing overhead. And once we have our products, we're gonna move cost of goods manufactured into the finished goods. Once we sell the finished goods, we're gonna move them to cost of goods sold. At the end of the period, we're gonna go and close this manufacturing overhead, and we're gonna have under apply overhead cost, either over apply overhead cost. What we're gonna do if we have a multiple predetermined overhead rates? Well, that will be a complex situation. As you can see, with one manufacturing overhead, it's kind of tricky. Imagine if we have more than one predetermined overhead rate. Large company usually using those multiple predetermined overhead rates. It's more complex, but it's more accurate. And you can come up with more accurate cost of your products, which again, don't forget, that's what we're chasing at the end. We're chasing our products to be accurately cost and including all the costs, so we can make the client to pay for those costs. Otherwise, we have to pay for it. And that concludes today's chapter.